Hi, I'm Jim Jubak, and welcome to this week's Quick Pick video. This week's Quick Pick is the Utilities Select Sector SPDR ETF, ticker XLU. In other words, a utility ETF. Why utilities? Well, I've been watching them very carefully over the last couple of weeks. They're going up as the market is rocky, as there are fears of a recession. They're not a stock group that I would necessarily hold throughout a recession because the economy does indeed slow down. The amount of energy that people are going to use does indeed fall. But in the early stages where people are looking more for safety than they are for necessarily an economic story, I think that utilities are the place you want to be. I think you can get good value by doing stock picking as opposed to buying an ETF. And if you go to my dividend portfolio on my jubakpicks.com or jubakam.com sites, you can find individual utilities to buy. I think they will do it slightly better than this ETF, but this ETF has a lot going for it. So this here on February 23rd was at 65. We're now at 74. So we're talking about a gain of about $9. The XLU ETF is up 10.5% in a month, almost 5% in a week, only up 4.8% year to date. I think what we're seeing, is a pretty clear acceleration. The other thing about this is that it has an extremely low expense ratio of 0.1%. So you're not paying much for this to be managed. And you're looking at about almost a 3% yield. So you get some money while you wait. You're getting better than you're getting on treasuries. Utility yields tend to go up over time so that you're not looking at a situation where you're going to be falling behind rate increases. So all these things are working in your benefit. Because of the way that utility rates work, that if a company adds capacity, it has to prove to the regulators that it needs to add capacity, it needs to build a new plant. And then it gets a guaranteed rate of return, like 8% or 10% or whatever the utility regulators say. So the more plant you can build, the better it is for your revenue. Right now what we're seeing is utilities come to regulators and saying, hey, how about a wind power plant? Or how about connecting our grid to other parts of the grid and building a long transmission line? So we're seeing more capacity being added to this, and regulators therefore putting more capacity into the rate base, and that means higher revenue for these utilities, and that's another reason to like them over the next, well, say 2, 3, 4, or 5 months until we get a recession slowdown. So thanks for watching. It's been Jim Jubak with this week's Quick Pick. If you like this video, please like it. Subscribe to my YouTube channel so you get notification of when we do the next one, and we're doing about 3 a week. And if you want more of my stuff, including the portfolio that utilities are in, that's the dividend portfolio, you can find that on my jubakpicks.com free site. If you want that portfolio plus an ETF portfolio, which is where I've got this ETF stashed, it's been a member of that portfolio since July 13th, 2018. It's up almost 43% since then. One of the things to remember is that you only get that portfolio, that ETF portfolio, on my paid site. So, jubakam.com, find the link down below. Thanks very much for watching.